it makes no sense to have a world, an economy in which we have homeless people and empty homes.
Right.
It does no good to throw people out of their homes.
Right.
We have ways that we could have avoided this, but the bankers didn't want it. And unfortunately, the Obama administration gave in to the bankers. They kept listening to the bankers in the design of the programs that would help the homeowners, and they kept putting forward programs that many economists that looked at them said are not going to work. But they didn't listen, they didn't work, and here we are, years after the bubble broke, still trying to deal with this problem.
Right.
Related to that, if I could jump in for a second, a couple days ago Mitt Romney was saying he would get rid of the Dodd-Frank. Have the banks been reformed? The banks, there's a lot of questions this past week. Bank of America, a number of banks in Europe. What is the status?
And Dodd-Frank did what?
That was the banking reform.
Okay.
The problem with bank regulation, with the Dodd-Frank bill, which attempted to re-regulate the banks after the deregulation of the 90s, was that it didn't go far enough. Not that it went too far. And we see evidence of that, and it's been happening in recent weeks. The market has no confidence in the banking sector.
Okay.
There's a lot of non-transparency, and that means when rumors go around about what is going on, everybody knows that they don't know.
Okay. And what's the economic impact of that? Yeah.
Well,
so what?
The consequence is that we are once again at a risk of a freezing of the credit system.
Okay.
The credit system relies very heavily on banks being willing to lend to each other.
Right.
When one bank has more capital than it needs, or has greater need than its capital, it can borrow from another. This kind of banking, interbank lending, as it's called, is essential to the functioning of the banking system. In the absence, the Fed has to step in massively.
Okay.
In
there's uncertainty, they stop lending.
In 2008, each of the banks knew that it didn't even know its own balance sheet.
Okay.
That they had lied so much, used off-balance sheet accounting, deceptive accounting so much that they didn't know their own balance sheet, and they knew then that they couldn't know the balance sheet of any other bank. They didn't know whether they could trust lending to any other bank.
Okay.
We are at risk of being in that situation once again. And one of the fundamental errors that we made in Dodd-Frank was not to be tough enough about, for instance, the excessive risk-taking, over-the-counter, non-transparent CDSs, derivatives, not to increase capital requirements enough. The optimists say that Dodd-Frank provided a framework if the regulatory authorities take the actions that are required to address the problems. The pessimists say, yes, but much of the responsibility for regulation is given to the same agencies, the Office of the Comptroller of the Currency, the Federal Reserve Board, that were captured by the financial sector, by the banking sector before the crisis. Why do we think that they will do a better job now than they did then?